Afternoon, everyone. Firstly, I need to apologize for this delay of 2-3 minutes because of some technical issues on connecting the call. Anyway, and a warm welcome to our post-earnings conference call for the quarter and 9 months ended December 2017. I have with me on call Mr. Vijay Kumar, our CFO, and Stellar IR Advisors, our Investor Relations Advisor. I hope you all have received the updated investor presentation. We have also made arrangements for uploading the same on our website for your reference. We shall share key updates on the business first, followed by a brief summary of our financial performance, which will be presented to you by our CFO during the quarter and thereafter. We shall take questions. To begin with, as most of you would be aware, the company is setting up a new processing facility at Ragampeta in East Godavari district, which will have a total capacity of 20,000 metric tons per annum. In terms of capital outlay of the planned rupees 90 crore, rupees 18 crore has been deployed as of December 31st, 2017. The piling, plinth and structural works have been completed. Pre-engineered sheets, insulated wall panels and roof panels are being installed. They are in the process of being installed at this point. And purchase orders for many imported machinery and a few indigenous machinery have already been placed, and as per the terms, the advances also have been paid to them. We expect the trial production to commence in Q2 of financial year FY19. The industry dynamics that we currently operate in give us the confidence that we'll be able to optimally utilize the additional capacity within 3 to 4 quarters of it being operational. I would also wish to inform you that the company has received from CRISIL rating agency a credit rating of A2+ for our export funding and A- stable for term loans. We believe this will help us in streamlining our interest costs going forward. Further, on the second part, aquaculture exports from India have continued its ongoing growth trajectory and gaining market share globally on the back of its quality produce and competitive pricing. Key markets remain USA, Southeast Asia and European Union. However, there have been some concerns as reported in the media regarding the rejection of consignments from India by the EU and delisting of certain shrimp exporters. In this regard, I would like to inform you all that as far as our company is concerned, none of the consignments have been rejected thanks to the right systems and protocols in place for checking the product prior to harvest and post-harvest and pre-export for the banned substances. In fact, EU share on our revenue mix has grown from 18% to 24% in 9 months of the in comparisons between financial year FY17 and 9 months of FY18. And now I would like to forward this call to our CFO, Mr. C.H. Vijay Kumar, who will give you a brief detail of the financial performance of the Q3 and 9 months.
Hello everyone. Let me now come to the financial performance of quarter 3 and 9 months of financial year 2017-18. Our total income, including net revenue and other operating income for quarter 3 of financial year 2017, was reported at rupees 257.2 crores and the sales today at rupees 812.5 crores in 9 months of financial year 2017-18. That is rupees 109.7 crores.
Sorry to interrupt. Excuse me, sir. Sir, your voice is not clear.
Okay. In full year of financial year 2016-17.
I'm sorry, it's still the same.
Hello, is it clear?
Yes, sir, better. Thank you.
Yeah. While there has been a decline of 8.5%, from quarter to quarter, which is on account of seasonality, on year-to-date basis, the growth has resulted from higher volumes and improving product mix. We sold a total of 11,169 metric tons of finished goods in 9 months of financial year 2017-18, as compared to 9,898 metric tons of sales in full year of financial 2016-17. At the EBITDA level, we reported rupees 34.3 crores in quarter 3 of financial year 2017-18 and rupees 102.3 crores in 9 months of financial year 17-18 versus rupees 55.8 crores in full year of financial year 2016-17, translating into EBITDA margin of 12.9%, 12.6% and 7.9% respectively. Profit after tax stood at rupees 18.8 crores for quarter 3 of financial year 2017-18 and rupees 59.2 crores for 9 months of financial year 2017-18 as compared to rupees 24.3 crores for full year of financial year 2016-17. PAT margin stood at 7.1%, 7.3% and 3.4% respectively. The drop in profitability on sequential basis is largely in line with the decline in top line during the quarter. However, on year-to-date basis, profit margins have expanded on account of operational leverage as we fully utilized our capacities, backward integration to reduce costs and improving product mix. Now I am forwarding call to our Executive Director, Mr.
Okay, thank you, Mr. Kumar. Okay, going forward, we expect demand to remain firm and our capacities to continue to be optimally utilized. We continually strive to reduce our costs through backward integration and enhance our product offering to customers via value addition, thereby improving profitability of the business. This is all from my side. I would now request the moderator to open the call for question and answers. Thank you again.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Chintan Modi from Motilal Oswal Securities. Please go ahead.
Hey, hi. Thank you for the opportunity. A few questions from my end. One is on the new processing facility, which is like 20,000 metric tons per annum. Can you give a split between what would be the capacity of the block and what would be for the raw IQF?
Okay. Mr. Chintan,
yeah.
First, in the new capacity, actually the capacities have been split into two. One is ready to cook and ready to eat. Now in ready to eat, of course, it is all on cooked product. In the ready to eat, in the ready to cook, it is like you said, it is split between IQF and plate freezers. Among the IQF, the capacity is going to be approximately, just give you on a per day basis, it will be around 35 tons per day, while the block capacity will be 10 tons per day.
Okay, so and typically how many days operational do you assume for this? 300 days?
Yeah, we are assuming 300 days, and as you know, there are also will be our maintenance schedules which will be there, so we have to consider that point. Yeah.
Okay. And do we, the total outlay is 90 crore rupees you mentioned. Do we have any capital subsidy from the government for this plant?
For this, at this point, we have... hello?
Yeah, and then.
Yeah, sorry.
Hello?
At this point, there is a grant by the Ministry of Food Processing, for which, of course, the company has not applied, but there is a grant which is there for 10 crores, depends. There is also interest subvention also which is there, but the company has not yet applied on for that at this point. So right now, the entire project is being funded by the proceeds of the IPO. 90
Sure.
For 9 crores.
Yeah. And what is the peak level of revenue that you can achieve from this investment?
Okay, with regard to the revenue, as you know, this current year we are planning to start commencing the operations in the in the next fiscal, Q2 of FY19. We are looking at a utilization of 50% of the capacity utilization in the first year, and subsequently in FY20 onwards, we look forward to utilize 75% optimum So accordingly, the revenue will also be planned. It will be helping. The main focus for enhancement of revenue is just not on capacity utilization in quantity, but also by doing enhanced products, whether it is in ready-to-cook category, whether it is in the raw format, or in the ready-to-eat category of cooked product. So the whole objective of enhancing the revenues is also it's got to do with the product scope, which is being addressed.
Right. So I just wanted to, understand, like, from an ROC perspective, if you are able to do X amount of revenue, what would be the EBIT level margins, and considering the working capital and the investment you are doing, what is the ROC, maximum ROC that you can make? Would that be northwards of 25% or something?
See, I'll provide you that answer a little later.
Sure.
I'll give you that answer a little bit later on that.
Sure, not an issue. Secondly, in terms of margins, do you think we have seen a significant rise in the margins over the last year? So first, what were the reasons for the same, and do you think this is sustainable over a period of some time later?
See, the main reason for the company achieving these margins is, of course, as a significant enhancement in the integration part, whether it is with regard to the increase of farming area significantly or adding up more hatcheries as we speak, and also into the future also we are adding up more hatcheries to improvise on the seed supply for us, for the company's farms, as well as supplying the seed to its farmers located on the east coast of India. That is one of the main reasons, the integration process. Apart from that, the major point is the producing higher value products, even in the ready-to-cook category, in the present category, to the markets like USA and European Union, United Kingdom, which is part of European Union as we speak at this point. So that is one of the main, these are the two main reasons. One is the integration part, which is significantly helping the company in reducing its cost. Aided, by the way, by the efficiencies of operation which are there. That is one of the reasons why even the costs in the manufacturing side also have been coming down by optimally utilizing. And the product scope which is there, which is helping the company to increase its margins. Now, regarding sustainability, well, our entire sector also deals with sustainability, and we are looking forward for, sustaining these. So this is not, we don't want this to be a one-off situation, and we should be doing it on a continuous basis. So that is the objective of focusing more on both forward and backward integration.
Sure. And in terms of... yeah.
So may we request that you return to the question queue? There are participants.
Just one thing. So do we have any export incentives in this margins?
There is an export incentive of MEIS, Merchandise Export India scheme, which will be there, which of course was up 5% of the FOB value, and it has been enhanced to 7%. But that is not, fully covered in this. Apart from that, there's a duty drawback, which has been reduced recently. It's basically whatever has been enhanced in Merchandise Export India scheme has been reduced in the duty drawback accordingly. So there is export incentive also.
Okay, thanks a lot, sir. I'll come back in queue.
Thank you. The next question is on the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. Congrats for a good result. So I just wanted to know what was the export sales numbers excluding the export benefits in third quarter of FY18, please?
Yeah, the export sales numbers without the that will be 233 crores.
233 crores, okay.
Yeah.
Right. So just wanted to be clear that the entire 9-month benefit of the change in accounting policy has been recognized in this quarter, right? That 71 million, that has been recognized in this particular quarter, right?
Yeah, that is correct.
Okay.
But it is going to be, that is how it's going to be even going forward also. So,
right.
Yeah.
So that is what the industry is, every player in the industry is actually doing. So that is
correct.
Yeah.
Correct.
So sir, the MEIS has increased to 7% and you're saying the duty drawback has reduced. So going forward, can we take 8 to 9% benefits because that will neutralize each other, right? So it will be same going forward?
It will be the same. going forward. That is true. But again, as you know, it is subject to government policy, and as I had informed to you also in the last quarter call, that quarterly results call, that we, by integrating ourselves further, whether or not the incentive is there, eventually we need to move into a situation where that we are independent of those. So we have to achieve our margins by our operations, by the type of business we are doing. So, but anyway, yeah.
But there is no imminent danger of the export incentives getting reduced, right?
There's nothing. I think the same question was asked by you even in the last call. But there's nothing. So, in fact, after you have asked, they have increased it.
Right.
I mean,
yeah. So, the next question is that the employee expenses have increased like 26% quarter on quarter. Can you give some color on that?
Yeah, the employee expenses actually, that has been, there's been a change in manufacturing. Means what happened is some of the manufacturing expenses have actually reduced and the employee expenses has increased. Of course, one of that is, as you know, typically in our area, the bonuses are given during the month of December and January because Pongal time is our annual festival time.
Okay.
So
is it that the contract labor charges that you used to recognize in the manufacturing expenses, now that you're recognizing in employee expenses?
No. There some part of the manufacturing expenses got transferred to employee expenses, salaries and wages. That is true because earlier it was on a weekly basis and daily basis. Those got transferred. Apart from that, the bonuses of December, January, that significant part, that will be adding during these 2 quarters because it is done usually in our area during the Pongal time, as I said. So that is the reason which is there.
Okay.
Which is being on the way.
Right. And lastly, sir, like out of the planned capex of 90 odd crores, till now we have done only 18 odd crores. Do you think we remain on track to start trial operations by second quarter FY19?
Yeah, actually 18 crores is the expenditure already incurred, but there's a significant amount of already advances and also LCs which are open. Actually, most of the imports of the imported goods are being procured on LC terms. Okay. So naturally, those amounts are actually sitting with our bank, but they have all been backed up by LCs. So we are on track, actually. So it's just the delivery of equipment is being planned from this month end and March. So as they come by, we are on track pretty much. That's what we are looking for opening commissioning during the second quarter, as mentioned.
Sure. And sir, how many months it takes to get all the approvals to begin the commercial operation? And just the part of the last question only. So, sir, how many months it takes to get all the approvals to begin the commercial operations?
Well, at the most it may take around 1 month max. I mean, at least to be to start off for a regular market for regular markets. Now, with regard to US FDA and EU and all that, since we are already well versed with the procedures and experienced in those on those protocols, we will be able to complete that also maybe in another 1 to 2 weeks extra. So at the most, you look at it to export to all markets, should be looking at 30 to 45 days max once we start the operation.
Okay, thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi, good afternoon. I wanted to ask regarding your farming operations, which currently forms about 18 to 20% of your total raw material that you acquire. With the increased capacity, are you also looking to increase your farming activity?
Mr. Puneet, at this point, we are looking at improvising the yields of the farms by bringing in new techniques.
Sorry to interrupt, sir. Your voice is not clear.
Yeah, Mr. Puneet, I was saying that at this point, we are looking forward to improvise our yields of our existing farming area so that we enhance the yields, so that we produce more quantity by bringing in new techniques. So with regard to enhancement of the
Ladies and gentlemen, the lines of the management seems to have got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, this is the conference operator. Please note that the lines of the management seem to have got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
Yeah, Mr. Puneet, I'm sorry for that.
Not a problem. Not a problem.
Yeah, so as I was explaining, we are looking at implementing new techniques to enhance the yielding of the produce from the existing farmed area itself currently. And we are actually looking forward to bring out more quantities out of the existing farming area. As far as new area is concerned, we have not yet made any decisions of enhancing our from the existing area. So we look forward to what you said is true, that based on the enhanced capacities of processing, whether the farming output will be increasing accordingly. We will be trying to look forward to maximum provide this 18 to 20%. We'll maintain around this 20% at this point by enhancing our yields.
So two related questions to that. One is, by how much percentage would you be able to increase the yield? And if you can give some color of how would you be able to do that? And two, if the percentage of procurement from in-farming reduces, does that impact the margin? So I just want to understand what was the margin differential of your in-farming activity, which is backward integrated, versus procuring from the market?
Okay, I have explained this in our last call. With regard to improvement of yields as concerned, or improving the output from the farms, there are the new techniques which are being implemented, which is the nursery grow out format, where the seed is going to be grown out for 20 to 30 days in the nursery stage and subsequently being transferred to the grow out pond, thereby eliminating the risks of any sort of mortality and enhancing its output ability. So that is the key part, apart from the water management and the farming practices which are already being implemented. Now, with regard to the gap between the own farming and the outside procurement, our own farming, as you know very well, that since we have already efficiently been implementing that, the cost will be, yes, the cost difference is there between own farming and outside farming to the extent of approximately a range of 50 to 80 rupees, depends on each, the sizes what are being harvested, and so it just depends on how it is. But as we increase our output and as well as increase our own output, we will definitely be looking at improving the margins. But the margins of the company will not be just based on the farm output. It's a dual approach. It is also based on the value-added component. So where, as we produce higher value products, we also look forward to margins there. So to answer your question straight, it's just the farming output only is not a factor.
Sorry to interrupt, sir. Excuse me, sir. This is the operator. So can you speak a little far away from the microphone? Your voice is echoing into this call.
Yeah, sorry. So as I was saying, hello.
Yeah, it's fine.
Yeah, I was saying it's just not the farming output which will be the reason for the company to maintain its margins or to grow its margins. It is also the product scope which is there, which is the key part. As you must be understanding that the ready-to-eat has not yet been started. Once that starts, we look at further rise in the margins also, which will be helping the company to not only improvise its margins but also maintain its margins. Yeah.
Okay, and so the last question from me, because you mentioned that a lot of that has to do with the forward integration of value-added products in terms of your margin expansion. So two questions on that is, one is...
Sorry?
Since the line for the current participant seems to have dropped off, we'll move on to the next. That is on the line of Nitin Avasthi from Edelweiss. Please go ahead.
Hello, sir. Thank you for the opportunity. So I would just like to ask, if I see the trend of exports from India, normally Q4 has been where the drop comes in and then it picks up again at Q1. So will you also be a victim to the cyclicity of the business?
Well, it's not really being a victim, but that the trade trend is such that the farmers, the producers, whoever are producing the shrimp in aquaculture, stock the seed during mid-December to late and onwards, so that once the winter effect is closed down, the stocking of the seed happens. So it is a natural phenomenon that the output is increasing significantly from the last quarter of the financial year, and it goes to its peak during the first quarter and second quarters of every financial year, Indian financial year. So it's not that we being a victim; it is the general trend of the trade, and I think that's how it will be even this year. But as I had mentioned in my earlier call last time, that since the growth of aquaculture is happening throughout the country, and we believe that this is going to be a year-round supply because of the different climatic conditions in different regions of the country, and they are not always all the same. So end of the day, it's going to be a throughout the year affair. It's just the point is that there may be a marginal deviations by around this 8 to 10% level as far as supply is concerned. Yeah.
Okay, so the difference is happening because of the supply. The demand is constant throughout the year.
The demand has been there. Yes, we don't. Yeah, the only difference is now it's no longer the Indian export is no longer dependent predominantly only on the US or European Union markets, but the Southeast Asia also is a significant player. So the demand has been there. Even there are times when similar to supply, there are times when the demands will be at its peak. For example, when the overseas markets want to stock the product prior to the holidays time, that is starting from Thanksgiving onwards till the end of Chinese New Year, which is going on right now, and Lent period. So there are times where they stock in product more. So otherwise the demand has been quite stable, and it is going to be there. It's just that there are times of a year where the demand will be significantly higher because they have to plan to stock the product much in advance.
Okay, sir. So my second question is, what would be the yield that you would be able to realize per kg from value-added products, roughly?
It will be in a ready-to-cook category. It will be going to around 60 to 65% range.
60 to 65% higher than what you're currently realizing?
No. It will be lesser. Sorry, what I'm trying. The current yields will be 65 to 68, 69%. But when you do value-added products, the yields will be reducing.
Okay, no, I'm saying like per kg, what will you be realizing in terms of your sales? So you had mentioned.
Oh, sorry.
27 is what you have realized per kg for the 9 months. Sorry.
Okay.
So similarly for value-added, what would you be realizing?
When I heard yield, I thought you were talking about the product yield. But on the realization part, it will be ranging anywhere between 800 to 950 rupees. Depends on the products and the sizes what we do. It is also, I'm just giving an average number, but it will be varying based on the products and the sizes what we do. So it's an approximately 150 rupees to 200 rupees more, approximately.
Okay, sir. And so last question from my side. The increase of sales which has come in this time, how much of it has come in from new customers and how much of it is a part of the existing customers expanding their orders from you?
Mr. Nitin, the increase in business is entirely got to do with existing customers increasing their business with us.
Okay.
Significant amount of new customers have not been roped in, and there are very few players, they are not so significant. To be precise, they are insignificant, and it is the old customers, existing customers who have been dealing with us for years together. We have been developing new strategies, and we have increased the business with their support, and it's a mutual support from our end as well as from theirs.
Okay, sir. Thank you, sir.
Yes, thank you.
Thank you. The next question is on the line of N. Samraj from Dwark Wealth Managers. Please go ahead.
Yes, sir. Greetings from our company.
Yes. Good afternoon.
Sir, on Friday, coincidentally, the entire aquaculture published their results. And what we found out when we did an analysis was that Apex Frozen Foods has got about 400, a little bit more than 400 bips, about 4% plus in gross margins compared to Avanti Frozen Foods. So we just wanted to find out, so what is this magic sauce? That is, if you want to answer the question, if it's not proprietary techniques, otherwise you can skip it.
Mr. Samraj, this is the second time, of course, I have my good regards for you. Yes. Thanks for your confidence in our company, but I would like to tell you, it's a coincidence, as you said, it's a mere coincidence that all the three companies have announced their results on the same day. But I am not in a position to comment or make any sort of comparisons with other companies. I can only, we can actually comment only on our company's performance and if it is going to get impacted in the positive side or negative side. I do not know why their result is like that, but as I have been giving out our explanations, clarifying on our performance, and our goal is to sustain these margins and sustain this growth. That is the ultimate goal for everybody in the company. I hope you would appreciate that.
Sure, definitely. Now, just wanted to know, sir, because the industry is the same. Just wanted to know whether
the industry is not the same. Mr. Samraj, industry is not the same. There are some segments of the industry where some companies are doing significantly higher. There are some segments of the industry where some companies are doing significantly lower. So we can't really have an exact comparison on this. So as you know that Apex Frozen Foods is involved primarily and the core activity is processing and export. It is only being aided by other segments of the industry, whether it is farming, hatchery or anything else. It is only being aided. The core activity will be processing and export for Apex. And yes, as much as possible, it is being aided by other segments. So it's not. So I can't really make comparisons with other companies. Don't mind.
That we just thought it could be some specialized proprietary patented techniques on your part which perhaps you may not want to share with us. Okay. Now, right up till last year we were tracking the garment industry, export garment industry very closely, sir. What we find is from the marketing point of view, and as you were rightly mentioning about optimizing the capacity utilization. So would the management be considering as a marketing policy to go in for mass volume sales to perhaps the Far East, China, Taiwan, and all these other places where the regulatory problems are also not that much, and niche marketing, just like you have embroidery, tailored garmenting, and they specialized knitting production. So similarly, niche products ready to cook and ready to eat for the EU and the US, would that be considered so that you could get a very good utilization, upwards of maybe 80-90%?
Yeah, Mr. Samraj, the choice of markets for the company was based on where the company would benefit the most. And yes, it is a natural phenomenon for any industry in the world that if you are being paid the best value for a product, naturally there is a tendency that they have the most stringent conditions in place which you have to abide by. You have to follow them. You have to implement the right system so that you deliver them in the way they want. Otherwise, you will not be able to get those realizations, or you will not be able to produce those products for those markets. Now, that is one of the reasons why the company is focused primarily in the USA, the European Union, United Kingdom, Canada markets, and is not at all having much of any business at all, to be precise, in the Southeast Asia at this point. I wouldn't rule out that we will not do in the future, but end of the day, whatever is done, the business is done, it will be in the interest of the company. If there is a better value, better realization, better profitability, definitely we will explore that. But for now, I can confirm to you that the company is developing more business with these markets like USA and European Union to have a better realization and also better margins. So that will be the stand, and we'll continue to do it in that manner.
Thank you. The next question is on the line of Gautam Poonam Reddy from Samsung. Please go ahead.
Hello, sir.
Yeah.
Most of my questions are answered from the previous discussion, so I don't have anything now.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Chintan Modi from Motilal Oswal Securities. Please go ahead.
Hi, thank you for the follow-up. Just one thing I wanted to understand, since there are a lot of players in the Andhra belt, and most of them also exports to US, and the ecosystem is also much well developed over there. How do you create a differentiating factor between the peers and what basically keeps you ahead of the industry? If you can throw some light on that, be helpful.
Mr. Chintan,
Yeah.
it is very right on your part to know how we maintain ourselves in comparison to other peers in the industry. But at the same time, you need to appreciate that there will be some key points where we would have had a better proficiency or better understanding, or maybe we are able to deliver in a much better manner. So if I give any sort of throw any limelight.
No, I understand that, yeah.
It look like as though I'm making comparisons to somebody, which is not the right point. As in general, Mr. Chintan, the Indian seafood industry is doing very well. It has established its mark with regard to quality, number one, when compared to its Asian peers as well as its South American peers located in Ecuador and Mexico. And that is one of the reasons why worldwide everybody is looking towards shrimp supply from India, because of the consistency in which it is being delivered. And yes, we are very fortunate enough that our company is part of this country's seafood exports, and we are also doing our best to keep up that mark, and we'll be continuing to do that. So it's only about consistency, to be precise. That's what I will use that word. I'll not be able to tell much more than that.
Sure, not an issue. Secondly, from a client perspective, how many clients do we have today, and how much, top 10 clients would be contributing to our revenue? Some highlights on that, if you would.
Yeah, we of course have totally around 25 to 30 clients in totality between the US, European Union, Canada, and the United Kingdom, which is part of European Union. Some in the Middle East. But yes, the top 5 clients pretty much take up 60% of our revenue. They are the ones whom we have, as I had mentioned to one of the other callers in the call, that we have been strategizing with these existing customers and improvising our business with our existing customers on a much higher scale, so that we not only look at volume metric business, but also we look at realizations and marginal, getting higher margins also. So that's how it's been. So the top five customers pretty much take up 60% of our revenue, actually 65%. Yeah.
Sure. And in terms of revenue mix, what would be the split between the ready-to-cook and the ready-to-eat?
Sir, at this point, there is no ready-to-eat. The ready-to-eat is going to come from the new facility once it is started in Q2 of the next fiscal. So at this point, it is only ready-to-cook. However, in the ready-to-cook, there is a difference between how the products are, the kind of products which are mostly catered to the Southeast Asian markets, and the products which are catered to the Western markets like USA, Europe, Canada, or the Middle East, where they fetch a higher value. That's where the value addition is the key, which is totally aided by the to the company by its enhanced, expanded pre-processing capacities, which are actually helping the company in delivering those kind of products and enabling the company to focus on those markets.
Sure. And also, are you also planning breaded facilities in the ready-to-eat segment?
Yes, that is also there on the cards, and we will be focusing on that the moment the new facility is started. There has been place left for it, which I'll be able to provide more details after 2 quarters, I'm sure. I'll be able to give you more details about it at that time.
Sure, thanks a lot. That's it from mine.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is from the line of Harsh Saraswat from Giri Capital. Please go ahead.
Hello.
Yeah.
Hi, congratulations on your good numbers. I'm good. I just wanted to ask, are there any new developments on our brands?
Our own brands?
Yeah.
I'll be very straight on this. Even though we would be promoting our own brands, we actually consider ourselves to be privileged that we are actually doing in a private label, which are the end retail and the food service companies' brands. And as you know, as such in those countries, they would want to have it most of the product in their brands. We are mostly doing the product in their brands only. However, we are putting our efforts both within the USA and primarily in the European Union, where our brands have been doing well. I mean, they have been increasing on the rise. But when it comes to USA, it's mostly private label and retailer brands in which it goes.
In the European Union, any country has picked up?
United Kingdom and France are two of the countries where our brand is being going higher. Yeah, we have been developing with our existing customers. It's the existing customers who have the confidence in the company as well as its products who are accepting more of our brand.
Okay. Yeah, that's all. Thank you.
Thank you. The next question is from the line of Dheeraj Satsve from HSBC. Please go ahead.
Yeah, hi Mr. Chaudhary.
Hi.
I'm fine, thanks. Congratulations on good numbers. Just one thing, are you capturing working capital trends? I mean, what is the working capital cycle at this point of time for the 9 months and the quarter? And how has it improved over the last year? If you can just give me some numbers.
So the working capital cycle has been, as I had on the creditors, it has been at 10 days. It's been maintaining at that level. On the debtors, it's been maintained at 35 to 40 days. The inventory also has been maintaining at around 35 to 40 days max. So overall, if you look at it, I think it's all put together, it's 75, 80 days max. But it's in different stages. It's been as far as the debtors are concerned, there has been a reduction in the debtor cycle period because we have also been negotiating our terms with our clients in getting our payments much sooner upon invoicing, to be precise, and not upon delivery. And even some of our European businesses also changed, which was earlier more into 60 days or 75 days LC terms, are now been reduced to 30 days payment upon delivery. So those changes have been made with our esteemed buyers, customers who have been there with us for the past few years. With regard to inventory, yes, we have been bringing it down. The inventory cycle, as you would be aware, that most of the inventory is anyway already backed up with the orders which are already planned well ahead. And the inventory is anyway being funded with the pre-shipment funding taken on LIBOR basis, which is also helping in reducing the interest costs significantly.
So, is there any conservative number that can we reduce our working capital cycle from 75, 80 days to say 65, 70 days? Is there any scope for improvement?
I think this total working capital cycle, if you see, it is very much reasonable. It's in the industry. Further reducing, of course, as I mentioned, we are still discussing with our end customers. We are looking forward to have more of our customers to pay us upon invoicing and or maybe upon delivery rather than taking it to 60, 75 days. So that way, yes, we may be able to gain another 5 to 7 days minimum in the next fiscal for sure, because they are also, as the confidence improves and increases on the company, the customers are also willing to get into those kind of change their payment terms because they understand the company better every year as we do more and more business with them.
No, that is good, because in that case it will improve the cash flow from operations or after working capital changes as you go.
Yeah.
So fine. And just on the other part, which is the status on the lease premises, can we sustain that continuing?
The lease premises will be continuing, and I had explained this even in the last quarter's Concall, that as there are some technical points for bringing in our own facilities to optimum utilization in the first year. That's why we have considered 50% utilization only and 75% utilization in the subsequent year. Hence, we need these leased facilities to back us up. The lease facility will be continuing. It will be backing us up through the entire next fiscal. Thereon, it is entirely dependent on how our business strategy will be working with our existing customers primarily, because they are the ones who understand us fully. And apart from that, more new customers as we add a new market which we add, which is something I'll be able to give a better clarity in the next fiscal once this financial year is completed and as the new facility is getting ready, because as we look at newer markets. So if at all the business requires it, we will continue the lease facility also, and apart from our own facilities, even in FY20, depending on the business growth which is there, and it is entirely dependent on the business. But for now, we are looking forward to utilize these lease facilities until we get our own facilities under our control. To the optimum level of 75% utilization, as mentioned.
Okay. Thanks and all the best to you.
Thank you.
Thank you.
The next question is on the line of Rishabh Chaturvedi from Edelweiss. Please go ahead.
Hi sir, good afternoon. As per your disclosure, the amount raised for general corporate purposes was close to 30 crores and you have utilized the full amount in Q3. So if you can tell me how it was utilized?
No, the entire amount was not for general corporate purposes. There was also issue expenses in that to the extent of around 8.5 crores which was there, which was payable to various departments as well as the merchant bankers and the legal part. And apart from that, we have been doing some brand registrations, because we have also been adding brands. We have also been getting the trademarks done. So it was the entire 30 crores didn't go towards general corporate purposes. It was split up between both issue expenses and general corporate purposes.
Okay. Fine, sir. And one more last question. So what will be your full year sales volume? If you can give me a rough estimate.
Sir, it will be maintaining, to tell you the truth, it will be maintaining around the same level.
Okay.
So we look forward to, around the same level as it is. So you can just, if you look at the last 9 months, it will be based on the same level it will be maintaining even for the last quarter.
Okay. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, due to time constraint, we'll be taking the last two questions. The next question is on the line of Ayush Mittal from Mittal & Company. Please go ahead.
Good afternoon, sir. First of all, congratulations on a very good performance. Sir, I think industry would be starting on this new season for this calendar year now. Can you give us some insights on how the industry is shaping up? What kind of growth are you looking forward for this coming season?
Mr. Ayush, as I had mentioned earlier to some of the other participants in the call, India has been growing very consistently and hopefully it will be maintaining, because we have access to quality seed unlike the past years, earlier years. So season is something which is there. Yes, summertime is the optimum time for everybody to go for stocking, but however, the season is it's going to be throughout the year. So it's not that, yes, the peak will be, we see the most amount of produce being produced starting from March to all the way till July, June to July in Andhra, but then other states also picking up like Orissa, Gujarat and Bengal to be precise, apart from Goa and Maharashtra, which are also adding up agriculture. So as such, the growth for next year is being planned. We are planning to utilize our existing facilities, own as well as leased, which are there in the optimum level, like we did in this fiscal, almost 90% plus, because we have to get our new facility up and running in the Q2, and we will be utilizing, and we will ensure that the new season of the current year will be exploited to the best possible level with the capacities, the optimum utilization of the capacities. So we look forward for that. We will be maintaining our, double-digit growth, which will be there for the next financial year also, aided, of course, primarily by the season which you are referring to. But as I mentioned, it is going to be a throughout the year scenario. So we look forward for the growth.
And sir, of late we are seeing a lot of focus by the government also for this sector, wherein the first thing there was a budget outlay. Anything that you are seeing at your end happening, money flowing into this sector and how it is flowing?
Sir, I have no clarity at this point where the allocation of that money is going to be placed by the government of India, and if it is really going to impact the infrastructure. It is a great move. We really appreciate and thank the government of India to consider aquaculture as finally they are considering. I can use the word they are considering that this is a sector, and it is a very good thing, and we look forward for their support. I hope it will be helping the infrastructure capabilities in the states where there are problems or there are issues also, and it will be aiding the entire country's growth of aquaculture and shrimp exports primarily. We look forward for that. I don't know exactly where it is because I don't know if you can throw some light if you have some information. I personally do not have any information on where the allocation is going to be placed or which state or in what segment exactly, whether it is the farm, hatcheries or research. So, but I'm sure it is, end of the day, the government has considered. It is a good thing. It's a very good sign, positive sign for our industry, and we look forward for their support in the future also. That'll be a good thing. It's a win-win situation for everybody in the industry.
Thank you, sir.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, so thank you for the follow-up. In one of the slides, you have mentioned that you are going to open a new hatchery. So I just wanted to know when that will happen and what is the planned capex for that?
The capex for that, it was from the internal accruals only. Of course, it will be around 8.5 crores. It is already being completed.
Okay.
And we are looking forward to complete it and open it by March end, if not for sure by April end, because there is a procedural, we just submitted our applications to the Coastal Aquaculture Authority to approve it. They allow to come and do the visit. We look forward to start it running it by the end of this fiscal, before the end of this fiscal mostly. If not, it will be done in the first month of next fiscal.
Okay, great. So this will be majorly used for your in-house farms, or you will be selling it outside also?
We will be doing both. It will be majorly used for our in-house farms. As you know, our farms itself will be the demo for our shrimp seed, which is produced from our hatcheries.
Right.
The hatchery will be catering to the farms primarily. Post in surplus of whatever is being catered to the farms, or at times when the farms may not require the seed, the hatchery will be selling the seed to the farmers located in Andhra as well as the state of Orissa and Bengal, because this new hatchery which you are referring to is located close to the border of Orissa in the northeastern part of Andhra Pradesh state.
Okay. So any major revenue we can expect from these operations next year?
As such, the revenue with this hatchery alone will be not very significant. As you know, currently the company is very significantly dependent on seed supply from outside hatcheries. And as I mentioned, most of the seed will be utilized for the company. But there is another hatchery also which is being planned, which will be up and running sometime in the next fiscal. Once that is up and running, we will also look the hatchery operations to be significant. I mean, at least I shouldn't say significant, considering the processing and export being on a very high number. At least it will be a reasonable revenue generator, the hatchery operations itself. We can start considering it as a segment, hopefully from the next fiscal year, as an independent operation.
And the capex for that is included in the 8.5 crore that you already mentioned, right? Or that will be another capex that you will be doing for that?
That we will be doing additionally.
So how much roughly?
That is the same. It will be around the same level.
8.5 crores.
8 to 10 crores. Max, it will not be much more.
Okay. And so lastly, the lease charges that you pay to Royal Marine, I just want to clarify on that. So that is a fixed in nature, or that depends on the volume that you do from that? So how should we think about it, like the lease charges in FY19?
It is actually based on the volume. In our industry, the lease charges are based on the volume, actually.
Okay, so what is the run rate like in the 9 months? How much you have paid for that? Like last year we paid around 10 crores to them. So this year how much will be paying that?
Well, for 9 months, the processing charges, I'll just give you an idea. We have paid, the processing charges was, for 9 months it was totally, I think it's already been 10 crores, yeah. 10.5 crores, sorry.
Okay. Okay, that's it from my side. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Yeah, so thank you everybody. I really appreciate your patience and with the call disconnects and the technical troubles which we had. So I really look forward for any further questions. If you have, you can always get back to us directly on ir@apexfrozenfoods.com, or you can reach out to Stellar Investor Relations. You can feel free to contact either of the companies to get more information. We have uploaded the results presentation also on our website. Yeah. Thank you very much.
Thank you.
Please subscribe and press the bell icon.